The United States military shot down an Iranian drone over the Arabian Sea on Tuesday afternoon, 12 hours before gold recorded its largest single-day gain since the 2008 financial collapse, while central banks around the world continue accumulating physical gold at a pace not seen in over 50 years. Here's what they are not telling you. Gold surged 5.9% in a single trading session. The last time that happened, Lehman Brothers had just filed for bankruptcy, and the global financial system was hours away from complete cardiac arrest. Nuclear talks between Washington and Tehran are scheduled for Friday in Oman. The Federal Reserve is expected to cut interest rates at least twice this year. And somewhere between the headlines and the trading algorithms, gold quietly crossed back above $5,000 per ounce, marching toward a target that would have seemed impossible just 18 months ago, $6,000. The question is not why gold is rising. The question is why now, why this fast, and what do the institutions buying it understand that the rest of us are only beginning to see? Welcome to Metals Crux. Now, before we continue, if you have been following markets long enough to remember when gold was dismissed as a relic, when financial experts called it a barbarous metal with no future, then you understand something important. You understand that the crowd is often wrong at exactly the moment it matters most. Do me a favor. The same way you might share a valuable insight with someone you respect, take a moment and subscribe to this channel. Not for the algorithm, not for the metrics, but because what we analyze here requires the kind of patience that most financial content has abandoned entirely. And while you are here, drop a comment below. Tell us where in the world you are watching from. London, Dubai, Singapore, Tokyo. Because what is happening in gold markets right now does not recognize borders, and neither should the people trying to understand it. Now, let us examine what actually happened. On Tuesday morning, the United States Navy confirmed that forces operating from the USS Abraham Lincoln shot down an Iranian drone in the Arabian Sea. The Pentagon described the approach as aggressive. Within hours, gold was climbing. By the end of the trading session, spot gold had gained 5.9%, settling at $5,071.79 per ounce, the largest single-day percentage gain in nearly 17 years. But here's what experienced observers noticed. Gold had already been climbing before the drone incident. It touched an all-time record high of $5,194.82 just days earlier. The military. Confrontation did not create the rally. It accelerated a move that was already in motion. Something deeper was driving the price. To understand what that something is, one must understand the environment gold exists in right now. The United States government just emerged from a partial shutdown. Key labor data reports were delayed. Economic visibility, already limited, became even more obscured. At the same time, markets are pricing in at least 2 Federal Reserve interest rate cuts before the end of 2026. Gold, which pays no yield, becomes more attractive when interest rates fall. Money sitting in bonds earns less. Money sitting in gold loses nothing by comparison. The United States government just emerged from a partial shutdown. Key labor data reports were delayed. Economic visibility, already limited, became even more obscured. At the same time, markets are pricing in at least 2 Federal Reserve interest rate cuts before the end of 2026. Gold, which pays no yield, becomes more attractive when interest rates fall. Money sitting in bonds earns less. Money sitting in gold loses nothing by comparison. But there is another layer. Geopolitical instability is no longer an occasional disruption. It has become a permanent feature of the global landscape. The drone incident over the Arabian Sea is not an isolated event. It is part of a pattern. Tensions between major powers, supply chain vulnerabilities, energy market disruptions. Currency wars conducted through policy rather than declaration. In this environment, gold does what it has always done. It absorbs fear. It stores value. It waits. The analysts at Indocent Securities have set a year-end target of $6,000 per ounce. That would represent an increase of more than 18% from current levels. They expect gold to reach $5,600 by April, then continue climbing through the second half of the year. Reuters technical analysts suggest the current wave could push prices into the $4,150 to $5,998 range in the immediate term before the next leg higher. These are not speculative voices shouting from the margins. These are institutional analysts publishing formal price targets, and they are pointing in the same direction. But here is the part most commentary misses. The gold market is not just responding to headlines, it is responding to a structural shift that has been building for years. Central banks, particularly those outside the Western financial system, have been accumulating gold reserves at historic rates. They are not buying because gold went up. They are buying because they no longer trust the system that gold exists outside of. They are buying because they see what is coming. When the Federal Reserve cuts rates, it weakens the dollar. When the dollar weakens, gold strengthens. When geopolitical tensions rise, capital flows toward safety. When governments run, Deficits and print currency, hard assets become more valuable relative to paper promises. Every one of these forces is active right now. Every one of them points toward higher gold prices. The silver market tells a similar story. Spot silver rose 3.2% on Tuesday, trading at $87.84 per ounce. After touching a record high of $121.64 just days earlier, platinum climbed 2.9%. Palladium gained 3%. The entire precious metals complex is moving together, responding to the same underlying pressures. This is not random volatility, this is repricing. The world is repricing risk. It is repricing safety. It is repricing what it means to store value in an era of uncertainty. And gold, the asset that has served that function for 5,000 years, is being recognized once again for what it has always been. The institutions understand this. The central banks understand this. The question is whether individual investors will recognize it before the repricing is complete or after. Gold at $6,000 is not a fantasy. It is a destination that the market is already traveling toward. The only variable is time. And in a world where Iranian drones approach American aircraft carriers, where nuclear talks happen in neutral territories, where governments shut down and central banks prepare for rate cuts, time may be shorter than most people assume. The signal is clear. The question is whether you are paying attention.